Good day. Today we want to talk about partnerships. In partnerships, we have capital accounts, we have current accounts. But the focus for today is on current accounts. So for current accounts, why do partners prepare current accounts? They prepare current accounts to be able to apportion the salary, to be able to apportion the interest on salary, to be able to apportion interest on maybe drawings, salary, and profit appropriation. So the current accounts is being opened or is being prepared so as each partners will have different amounts each partner will have certain amount that has been debited into their accounts in terms of maybe drawings, capital, the salary, and the profit that has to be shared. So we have activity 1 to start with. So for activity 1, it says Smith and Jones decided to go into partnership. Smith would contribute 30,000 and Jones would contribute 20,000. It was agreed that Jones would work in the business and receive a salary of 5,000 per annum. An interest of 10% per annum was to be allowed on capital accounts, and the partners were to share the remaining profits. In the ratio of 60% for Smith and 40% for Jones. So the business makes a profit of 140,000 in the first year. Show the amounts to be credited to each partner. So we have to prepare a current account here. So what do we have in our current account? On the debit side of our current account, we have the salary paid and the balance carried out. On the credit side, because we have to have, the credit side is basically what we're going to use. So on the credit side of the account, we're going to have the interest on capital, we're going to have the amounts of salary that Jones is going to get, and profits that has to be shared between both of them. So first we have to make the analysis out. The capital contributed was 30,000 for Smith and 20,000 for Jones. So first we have to find, they said we have to find the percentage of interest on capital, and it's according to the notes, they said 10% of capital, 10% of interest should be given for each capital. So we have 10% of capital. So on the credit side of our current account, the first item is going to be interest on capital. So interest on capital for Smith will be 10% of 30,000, which is 3,000. And interest on capital for Jones will be 10% of 20,000, which will be 2,000. So on the credit side of our current account, we're going to have interest on capital, 3,000 for Smith and 2,000 for Jones. That's the first thing to be done. The second item will be salary. Smith is not getting any salary, but Jones is getting a salary of 5,000. That's to be on the credit side for Jones, 5,000. Then the profit appropriation. We have to calculate the profit appropriation. The total profit made is 140,000. So for 140,000 profit, still on the credit side, for 140,000 profit, 60% for Smith and 40% for Jones. So 60% of 140,000 is 84,000. So on the credit side of the current account, we're going to have 84,000 for Smith. And for Jones, 40%, it will be 56,000. So now we have to calculate the balances on the credit side for Smith and Jones. For Smith, we have items like interest on capital, which is 3,000, and profit appropriation, which is 84,000. So the credit side or the credit balance of Smith will be 87,000. And for credit balance of Jones, we're going to have interest on capital, which is 2,000, salary for Jones, which is 5,000, and 56,000 for the profit, for the share of profit. So the credit balance for Jones will be 63,000. So 84,000 for Smith, 63,000 for Jones are the credit balance for both of them. So on the debit side of the current account, we have salary paid for Jones, which is 5,000. Nothing was paid, nothing was apportioned to Smith, so we don't have anything there. So the balance carried down on the debit side, the balance carried down will be on the debit side. So for Jones, for Smith, we're going to have the balance on the credit side, which is 87,000. So 87,000 will be the balance carried down for Smith, and 58,000 because we have 5,000 for salary. So the difference between the credit side and the debit side for Jones is 63,000 minus 5,000, which is 58,000. So the balance carried down for Smith is 87,000. The balance carried down for Jones is 58,000. So the total in our current account will be 87,000 credited to Smith, 63,000 credited to Jones. That is how we prepare the current account. Thank you. Good day. Today we want to talk about preparation of profit appropriation account. I want to talk about preparing profit appropriation account. Here we're talking about where we are. So we go to activity 2, where we want to talk about profit appropriation account. For profit appropriation account, we prepare it to be able to get our residual profit, which means we have to understand the profit for the year from the income statement or from the statement of our profit statement of profit or loss and other comprehensive income. That's where we retrieve our profit for the year. So as soon as we have our profit for the year, so in our profit appropriation account, what we do is this: we prepare the profit for the year with less interest on capital. We had interest on drawings, and we less salary from it to get our residual profit. And that is what partners will share. So how do we prepare it? We have an activity here. They said, Don and Swale are equal partners. The partnership agreement provides for the annual salary of Don, 24,000 for Don. The salary for Don is 24,000, and for Swale is 23,000. It also provides for interest on capital for 7% per annum, and interest on drawing of 3% per annum. So we have the following information. So the capital for Don, so we have to put the capital together. We have capital for Don, which is 120,000, and capital introduced for Don is 24,000. So the total capital for Don is 144,000, and for Swale we have 116,000, which is 80,000 plus 36,000. So the total capital injected by Swale is 116,000. So we need to find the interest on capital. So the interest on capital for Don will be 7%, which is 7 over 100 multiplied by 144,000. That gives us 10,080. So 10,080 is interest on capital for Don. And for Swale, it is 7 over 100 divided by 116,000, which is 8,120. So for Swale, we have 8,120. So the profit appropriation account, the items in the profit appropriation account will be the following: profit for the year on the extreme end for 97,400. Then our interest on capital will be for Don, 10,800, for Swale, 8,120. So the total for interest on capital is 18,920. We take it away from 97,400, which is the profit for the year. So we have 78,480. We don't finish there. Then we go on to salary. The salary for Don is 24,000. The salary for Swale is 23,000. So we add it together. Then we take it away from 78,480. So 24,000 plus 23,000 is 47,000. So 47,000 minus 78,480 gives us 31,480. These are the deductions we have to make from the profit for the year. Note, the deduction we have to make from the profit for the year are interest on capital and the salary. So these two have to be taken away from the profit for the year before we get our residual value. Also, from the additional information, we have we have interest on drawing for 3%. So the total drawings for Dawn is 13,000 for the year, and for Swale is 7,000. So 3% of 13,000 is charged on drawings for Dawn. 3% of 7,000 is charged on drawings for Swale. So we have 390 for Dawn, 210 for Swale. So 390 plus 210 gives us 600. So 31,480. We have to add interest on drawing. Note, for profit appropriation accounts, profit for the year, you less interest on capital, you less salary, you had interest on drawing, because interest on drawing is an income for the partnership. So we have 600. So 600 minus 31,480 gives us 32,080. So our residual profit is 32,080. So this is the amount that Dawn and Swale will share in terms of their partnership deed for profit. Thank you.